And 72% of the time the market goes up. And the answer came to me. And that's when I developed my chart. The answer came to me is because, just like Caterpillar, when they pull their money out, you get out. Whoa.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Network.
Oh, God. Are you nuts?
With your host, Phil Grande.
Bye. And welcome to my podcast. Okay, so we got a big rally going in the Dow. Will it hold? I don't think so, and I'll tell you why. But first, it's amazing to me that we are being told every day, okay, that inflation, okay, is under control. Inflation is transitory. Transitory? Congress is spending $5 to $6 billion a day. They don't have that money. Every dollar is borrowed. The government runs a deficit every single day of $5 billion. What are you, nuts? That's not sustainable. Also, the jibber jabbers are saying inflation is transitory. Listen to this.
To the extent that we've had higher inflation readings in the last 6-9 months.
Persistent, might be temporary. Actually transitory this time.
It's much more likely to be transitory. It's much more likely to be temporary this time.
Temporary. Remember, we heard temporary a long time ago. I think it was, 8-10 years ago with, who was it? Janet Yellen. She was telling inflation was transitory. How'd that work out for us? Certainly wasn't transitory. Yeah, 2021 to 2022. It certainly wasn't temporary. And here we go again. Oh, it's temporary. Look at it. Prices didn't fall back. Have you seen prices falling back? I haven't seen prices falling back. So how can it be temporary? And services, inflation is still hot. Wages are locked in. We're not seeing wages go down. Insurance, have you paid an insurance bill lately? Exploding. So what are they talking about? Temporary. Deficits aren't temporary. When Washington is spending, Congress, $5 to $6 billion new debt every day. They're creating new debt, spending $5 to $6 billion. They don't have it. That's 150 or 180 billion per month. That's 2.2 trillion per year. They don't have that. They don't have that. So 30% of every dollar that Congress spends, we have to go borrow. We have to sell treasuries. Now, interest on the debt is exploding. $1 trillion a year. You got to be nuts. Inflation, what did they say? Oh, temporary? And here's the worst part. Congress has no plans. There's no plan to reduce the spending because they don't care. It's not their money. Congressmen don't care about spending. Not their money. Certainly not transitory. Certainly not temporary. How about structural? That's what it is. Now, we know there's enough BS to go around. One thing we know about Washington, there is BS. Oh, the other day we were told, the missiles, we ran out of missiles, we ran out of ammo, we have to stop the war. If we don't, we're going to run out of missiles really quick, and if something else happens, if something flares up somewhere else in China or wherever, we won't have enough ammo, enough missiles. Bunch of BS. Bunch of BS. That's one thing the government has, BS. And every time oil hits $90, they pull the same crap. Oh, what's that? Oh, we just learned there's a new peace agreement with Iran. Yeah, they're almost ready to sign a new one. This is what they're talking about now, another peace agreement. Because every time oil Every time oil drops, yields fall. And today, the 2-year is dropping faster than the 10-year. Now, that widens, okay, now remember, oil, yesterday, they were telling us oil was dropping. Every time oil drops, remember, automatically yields go down. But what did they do yesterday? The jibber jabbers on TV, the financial jibber jabbers on TV, who don't work for you at all. They work for Wall Street. The Wall Street people tell them which stocks they want pushed. Remember, they have to do that because they depend on their advertising dollars. Do you realize that Wall Street spends more advertising than anybody else? Come behind that is autos. But Wall Street spends all the money in advertising. That's why you got Fox on the air. That's why you got CNBC on the air. You got Bloomberg's on the air because they spend that kind of money. But my point is, when oil starts dropping, which it went from 90 down to 81 or 79, I think now, 79. When oil drops, do you know automatically yields drop? But yesterday, what did they say? Oh no, buy banks. Go in and buy banks. Buy banks? You don't buy banks unless yields are rallying, not going down. But see, they can get away with that. Because again, remember, the TV jibber jabbers, they work for the big Wall Street firms who push the stocks, and they use these jibber jabbers to push the stocks. That's their job. And in return, they get advertising dollars, like I said a moment ago. So yesterday, when oil was dropping, they were telling 65 million traders who trade every day actively, 65 million, go buy banks. Well, why would they do that when yields are going down? You know you got to have yields going up. Because one thing they know, Wall Street, all the big firms who push all these financial TV jibber jabbers to push their stocks, they wanted to push banks. And they know that these 65 million traders who trade every day, they have no clue about yields. Less than 5% of 65 million people who trade a day know anything about yields, know how it affects their stock. They have no clue. So yesterday, if someone knew to check their yields when they were being told, buy oil, well, they saw yields are going the wrong way. Yields are going down. Buy oil, buy banks. Yields were going down. They always go down. Anytime oil drops, yields go down. But they said, no, buy banks, buy banks. And boy, they plowed in and started to buy banks. But guess what? We're in banks. We're in J.P. Morgan and Bank of America. Did we get out? No, we stayed in. Why? Because we knew this was going to happen. It's called the short covering rally. We knew that the TV jibber jabbers weren't going to be honest with the 65 million traders who trade every day, because they don't have to worry about being honest because they don't check. The 65 million traders don't check. They didn't check yesterday when they were told to buy the banks and yields were going the wrong way. They didn't check. No one said, gee, I better check my yields. Let's see. If they told me to buy banks, yields better be going up. Oh my God, the 2 and the 10-year going down. I shouldn't buy banks. No. So it's a wonderful thing for Wall Street and the jibber jabbers. They work together. And so you have all these people plowing in, buying banks. And we're happy because we're in the banks. We knew this was going to happen. But isn't that a sad commentary? And that's how they run. That's how they run their operation on Wall Street and all these TV programs. Unbelievable. And if they only knew what yields should do for banks to be good, you got to have what they call the yield curve steepening. Now, I'm not going to get into that because you'd fall asleep. But there's a big problem. Banks aren't rallying, okay? The banks are rallying again for the wrong reason. And again, yields are falling. To keep the rally going, the yields should be going up. Big problem. So if you're in banks right now and banks are going up and you're long like we are, make sure you're taking profits like we are and reset your stops because this will all unwind. will all unwind. Now, again, you would think, right, that the jibber jabbers would tell all these traders, the 65 million people, the truth, but they don't. That's how they make money. And this is nothing but more than a short covering rally. There's no new money coming in. There's no new money. So when you're seeing the Dow up 600 points, it's all for the wrong reasons. The yields are all going the wrong way. So again, 5% of the 65 million traders, they're certainly not going to educate them Wall Street. So, and again, that's it's almost criminal if you think about it. So, the big problem that we have right now with the market, as I said, we have, again, the banks, okay, the industrials, the consumer stocks like Walmart and Home Depot and McDonald's, okay, because oil dropped, okay. All what we got now is, they are all rallying, but not for the right reason. There's no new money coming in to buy the industrials or buy the banks or buy the consumers or Walmart or Home Depot or any consumer goods. They're not there. So the only good thing is right now, as I said to my members, we're doing well with JP Morgan and BAC. We're going to stay with it as long as they keep the story up to the 65 million traders that, hey, don't worry, buy banks. And as long as those 65 million traders never look at yields, they'll keep buying. Yields are everything if you think about it. Because yields is a truth serum. Yields tell you the truth. Yields always tell you, where is the money going to go next? Where is the money going to go next? It's never wrong. Never wrong. And so again, right now, this thing that's going on in Iran, there's not going to be any peace. Oil is going to go right back up, and people are going to get slaughtered. Now, your banks, your techs. Let's talk about tech. So you got tech stocks. Think about the tech stocks. You got the four biggest. You got actually 7. There's 12 stocks that are tech stocks that are holding up the entire stock market of 700 stocks. Okay, now there's 5,000 stocks, but let's talk about the 700 that trade every day, that the 65 million people trade every day. So these stocks right now, okay, and if you keep on seeing oil keep coming down, and everybody is jumping on this bandwagon and saying jump into the banks, boy, people are going to get hurt. They're really going to get hurt. So right now, all these people, these mediators in Pakistan and Egypt and Qatar, they're all saying they're going to put a deal together. There's not going to be a deal. There's not going to be a deal. So the best thing to do, okay, when you're trading is before you start trading, you've got to learn how yields work. Because yields will always tell you what the market is going to do next, what the stock is going to do next. You only have a few sectors that you should follow in the stock market. They got these jibber jabbers have you following everything. First of all, you should be following the yields every day, okay? Because they tell you where the big money's going to go next, what sector, okay? Banks, for example, they do well when yields rise, especially the 2-year. XLK, tech, does best when the 2-year and the 10-year drop. So we have people in tech right now, okay, and who went in and are buying tech, but unfortunately they're going to get hammered because tech only does well when the 2-year and 10-year are dropping. Okay, and so anybody that's in there right now buying tech, you're starting. Tech is going down, not going up. You want tech to go down. You want to have the yields going down. If the yields go down, tech goes up. But what we're seeing is as tech continues to drop, ASML, CLAC, AMAT, LRCX, they're still dropping, okay? And we're still shorting them. And we'll continue to short them. And even though yields are down, okay? Usually yields are down, they rally right up. They love yields, okay, that are down, banks, that tech go up, just like banks. Banks will rally when the yields are going up. Tech will go up when the yields are down. But everything's reversed right now because Wall Street's got people out, all these traders out there buying, banks and tech when they should be buying them. So once you learn how the yield market works, the bond market works, it's so easy to trade. So anybody who loves trading tech, which remember 45% of the traders, okay, always are buying tech. Just know, tech stocks do well when yields are down, okay? And banks do well when yields are up. But sometimes they reverse. And you've got to be able to spot that and understand that. And why do they reverse? Because of like what happened yesterday. When they told everybody to buy the bank stocks yesterday, and they lied and said yields were going to go up because oil went down. Everybody knows when oil goes down, yields go down. But when they lied, everybody started to run into the banks, right? So we're long banks because we knew that was going to happen. We knew the TV jibber jabbers weren't going to tell the 65 million traders who trade every day, hey, geez, don't buy the banks, okay, because yields are going down, oil went down. They told them the opposite because Wall Street was pushing the banks. And when Wall Street pushes the bank, the TV shows pushes the TV jibber jabbers push them. So here you had all these people jumping into the banks yesterday, and they thought, and they had no idea what yields meant. They had no idea yields were going down. They were being lied to, saying yields were going up. It's a terrible thing. But once you understand the yield environment, what a difference it makes to your trading. I mean, just a big difference. And you only should be, again, there's only a few sectors. The pros only follow tech, number one. Banks, number two. That's what they follow. Okay, that's where all the money goes. Energy, and they also follow industrials. Okay, and that's pretty much it. Besides the small mid-cap stocks, that's all you need. That's where your money should be. And if you understand what yields are doing, then you're going to know when they're supposed to go up and when they're supposed to go down. So stop listening to these TV jibber jabbers. Okay, so that's it for today. So again, we got this rumor out there there's going to be another peace deal. No, there's not going to be another peace deal. I predicted when oil dropped to back to $65, we'd be back up to $90 if we were. I'm predicting that again. There is not going to be any peace with these nuts in Iran. The only peace we're going to get if we put boots on the ground and wipe out, okay, what they call their guard. All right. Well, that's about it. So again, thank you for listening to my podcast. I can't warn you enough. Learn what yields have to do with a stock you're buying. It will always protect you. You'll never be wrong. Okay? All right. See you on the charts. philsgang.com. Check us out.